Hey guys, I hope you're able to see me now. Yeah? Can you see me? Can you hear me? Hello, I'm Damien from forexball.com and I'm very happy to see you on this webinar. Hey, hey. All right, everything's fine now. Great, great, great. That's very good. I had a little tech issue here with with the software and the system, and I was pretty surprised that nobody's like responding to me, and I see like random people saying like hello, hello, hello. But yeah, now everything's all set. Ready to go, which is very well. We have 13 people currently. There were 15, but I assume they will come back pretty much. So I would like to say hi, hey to all of you guys. Currently, as you probably know, I'm located in Bulgaria, the capital Sofia, where the weather is pretty warm today, like 22 degrees Celsius, which is approximately 75, 80 Fahrenheit, I assume. Not very good in like converting like weather metrics, but yeah, I'm very happy to see you here, and I assume that more people are gonna join. We have 14 people already, which is pretty good. Yeah. Hey, Ergin, is that your first webinar? I'm not sure if I've seen you like like in the past sessions. Yeah, very good. By the way, guys, I assume that you see my face and you hear me pretty well, but I would like to ask you if you see the Forex Ball logo and which is on my screen currently. So if you can share this info, yes, you see it. All right, all good. Woo! Very well, very well. That's a very, very, very good thing. So now I've prepared a very interesting topic for you. You're probably familiar with it, most of you probably, but I decided to go a little bit back in the past and to share some details with you about the Fibonacci sequence, how is it built and how it applies to Forex trading and why it is important to Forex trading. So now I suggest that we proceed with this webinar. I will simply switch to our disclaimer, which we're supposed to show you. Here it is. We will stay for like 30 seconds on it until you all read it. In the meantime, I will tell you some details about myself. For the people who don't know me, for the more than 5 or even 6 years, I've been dealing with financial markets as a trader, as a writer, as a mentor. I've written like maybe thousands of materials and articles on the net. Some of them could be found on the Forex Gold website, so make sure you regularly check the blog about new awesome posts that we deliver constantly. Also, what can I tell you about myself? In my free time, I like to play guitar. I play bass guitar. I play also acoustic guitar, regular electric guitar. I can play drums, by the way. Not very bad in drums. Also, in my free time, I go and I do boxing with friends of mine in the famous club of the Pulevi brothers, which is like the Bulgarian boxing champion. This is what I do for like being fit and for sport. This is how I work out. My last session was yesterday. So pretty much these are the most important stuff you should know about myself. I like trading, I like charts, I like playing guitar and listening to music, and I like working out. So now let's proceed with this webinar. So as I said, today's topic is going to be related with the Fibonacci sequence, and I've named it the importance of Fibonacci levels in Forex trading. So the Fibonacci levels are extremely important in Forex trading, and the interesting thing is that they are not related only to Forex trading. They're related to many stuff. But now, until I have my camera still on, I would like to share some brief history information about that guy Fibonacci, who is actually an Italian mathematician who has lived, who have been born in 1175 and who lived until 1250. And this is the guy who introduced the Fibonacci sequence and suggested that it is related to a lot of things in this world. So what I'm going to do now is I'm going to stop my camera right now. Here it is. My face disappears. Voila. And now you'll be only left with my pretty voice, who is going to talk to you about Fibonacci levels. In the meantime, I strongly encourage you that you constantly ask questions in the live chat. Do not hesitate to ask your questions at any time, either in the chat or in the question section. I observe each of these two. So again, I repeat, do not hesitate to ask questions of any kind. I will be happy to interrupt and to respond to every one of you directly. So now let's switch to our first slide of this presentation. So this is the plan for today. I plan to discuss first with you the Fibonacci sequence, then the importance of the Fibonacci ratios, then we'll do some practical examples related to calculations, and then we will switch to the Fibonacci ratios in the nature. I will also discuss the psychological factor behind the Fibonacci sequence and how people are taking advantage of this psychological factor. Then I will talk about the application of the Fibonacci ratios and the sequence in Forex trading. We will discuss three popular Fibonacci indicators, which are the Fibonacci retracement, which probably most of you are using, which is a good thing. I'm using it too. Also the Fibonacci time zones, which is a very tricky indicator and very interesting, by the way. So we'll go through this one too. And then I will switch to the Fibonacci fan. Then I will like pop up my chart again. We will discuss some practical examples where you will be fully like free to mention the Forex pairs you want to analyze with me. And then we'll switch to questions and answers section. We will do a short poll about how satisfied are you from this webinar, and then we'll be good to go with this wonderful, and I would like to emphasize, extremely useful webinar. Again, I repeat, if you have a question, do not hesitate to ask at any time, because this is a very tricky matter, and it requires like attention to details and attention to numbers, and not many people are maybe like number friendly in their mind, and probably you have a lot of questions. Okay, I now start with the Fibonacci sequence. The important thing you should know about the Fibonacci sequence is that it starts from 0 and 1. So here is the 0, starts from 0, comma, and then continues to 1. And then every next number in the sequence adds the previous number in the same sequence. So when we start with 0 and 1, we add 0 to 1 and we get the next number, which is again 1. Then we add 1 to 1 and we get the fourth number, which is 2. Then we add the number 2 we received to the previous number, which is 1, and we get the next number in the sequence, 3. Then we add 2 to 3 and we get 5. Then we add 5 to 3, we get 8. 8 to 5, we get 13. We add 8 to 13, we get 21. And so on and so on and so on until we get, for example, you see at the bottom of this slide, you see 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 377, 610, 987, and so on and so on. And the next number, for example, which is not in the slide, but I have a calculator. For example, I add 987 to the previous number, which is 610, and I know that the next number in the sequence is 1597, and so on until eternity. And this is how the sequence is actually built. But now let's switch to the important Fibonacci levels and how are they extracted from this sequence. So you should remember a few stuff. Each number in this sequence is 61.8% of the one that comes after it, the next one. Then each number in the sequence is 38.2% of the number that stays 2 positions to the right. Not the next number, but the one that comes after it. And then each number in the sequence is 23.6% of the number that stays 3 positions to the right. So you have a first static number, for example, the next number is 61.8. You have a static number which takes 61.8% of the next number. It takes 38.2% of the number that comes after, and then it takes 23.6% of the number that comes after, the one that stays 3 positions to the right. For example, I've created these 3 calculations for you here. If we take the number that I just mentioned, like in the previous slide, 987, and you divide it by the number that comes after, which is 1597, you receive 0.61803381, which is approximately 61.8% when we convert this into a percentage. If we take the same number and we divide it by the number that stays 2 positions to the right, for example, 1597 plus 987, the one which is before 1597, we get the result of 2584, which is the second number after 987. So when we divide 987 by 2584, we get a result of 0.38196594, which is approximately 38.2%. And then if I take, for example, 2584, which is a number from the Fibonacci sequence, and I divide it by the number that stays 3 positions to the right, which is 10,946, we get a result of 0.236797, which is approximately 23.6% when converted into percentage. And now we're going to do some practical examples, and I strongly encourage you to get a calculator or to simply pop up a calculator that is built in your computer or your Mac, your built-in calculator, so you will be able to attain the ratios we're going to discuss by yourself. All right, and now I'm popping up this doc file I've prepared for you in advance that contains the Fibonacci sequence. Here it is, and it contains the sequence up to 832,040. See, all the numbers are over here. The one we discussed, 987, then the other one, 1597, then the next one, 2584, the one I used, here it is, this number, and the one that stays 3 positions to the right, 1, 2, 3 positions. Here it is, 10,946, and when I divide this number by the one that stays 3 positions to the right, as I did in the previous example, we get the result of 23.6%. All right, guys, now I would like to encourage you, for example, choose one number from the sequence you're currently seeing so I can prove to you that it works well. Make your choice. Say a number. For example, maybe 17,711 or another one. Make your choice. Somebody? All right. Let's try 17,711. 17,711. When I divide this number by the number that comes next, which is 28,657, and now I'm typing in this into my calculator, or maybe I can simply open a calculator that you will be able to see too. Here it is, the calculator. So 17,711 divided by 28,657, and we get a result. Here it is. 0 equals to 0. Let me take it out again. I'm going to copy the result and I'm going to paste it for you. Here it is. This is the result. And when we multiply this result by 100, we're going to get its percentage value, which is 61.8033, approximately 61.8%. Voila. All right, now I'm going to do the same with the number that stays 2 positions to the right. But I'm going to take some other random number. Let's take something bigger. Let's, for example, use 196,418. Here it is. This number, and I'm going to divide it by the number that stays 1 position to the right in the sequence. 317,811. I'm even going to copy this number so it will be like easier for me to paste it. Here it is, 418, whoops, 18, and we divide it by 317,811. The result, 0.618033, blah blah, and so on and so on. When I multiply this number by 100, I get the percentage, which is 61.8% approximately. Right? I assume that it gets clearer to you. 317,811, 61.8% approximately. And now I'm going to use the same first number, or 18. Here it is, and I'm going to divide it by the number that stays 2 positions to the right. Here it is, the base number over here, and the number that stays 2 positions to the right. 514,229. Let's pop up the calculator again. Oops, mistake. 96418 divided by 514,229. We get a result of, whoop, here it is, 0.38, 19, 66, 01, 12, 51, 79, 64, blah blah, and so on and so on. When we multiply this number by 100, we get 38.2% approximately. 38.2% after rounding, because 38.1966 when we round it is 38.2%. And now let's take the third number that stays over here, because this is the base number. This one is the base number. This is the one that stays 1, 2, 3 positions to the right. So let me scroll down a little bit. 19.6. All right, divided by 832,040 equals 2. Popping up the calculator again. 6418 divided by 832,040. The result, here it is, 0.2360. When we multiply by 100, we get the percentage that the first number takes from the number that stays 3 positions to the right. And this is 23.6%. All right. Remember these percentages carefully. I'm going to do one more quick check for you, so you will see that these numbers fully match. For example, let's take this one, and let's divide it by the one that stays 2 positions to the right, this one, and we're going to get this percentage, 38.2. So 28,657 divided by 75,025 gives you a result of, voila. When we multiply this number by 100, we get the percentage, which is 38.2 after rounding. And this sequence, these numbers, you simply get them by starting from 0 and 1 and adding the previous number to each number that appears in the sequence. So 0 and 1, we add 0 to 1 and we get the next one, which is 1. We add 1 to the previous one and we get 2. Here it is, over here. We add 2 to 1 and we get 3. We add 3 to 2, we get 5. We add 5 to 3, we get 8. Then so on and so on until 89 and 55. We add 89 to 55, we get 144. We add 144 to 89, we get 233. And so on until we get the big numbers. You add 75,025 to 46,368, you get 121,393, and so on until eternity. Even if you involve billions and trillions like big numbers, it will still give you these ratios when you divide a number to the one that comes after it. And then it will give you 38.2 when you divide the number from the sequence to the one that stays 2 positions to the right. And it will always give you 23.6% when you divide a number, a random number, from the sequence to the one that stays 3 positions to the right. And this is how the extraction of the Fibonacci ratios works. Now I'm going to pop up the chart again. Here it is. And we're going to discuss some nature stuff. The interesting thing is that the Fibonacci ratio is all built by this spiral over here, you see. So you see the small squares inside. You see 1, then 2, then 3, 5, 8, 13, 24, 34, and this spiral, I believe is the right word, I apologize. This spiral can continue until eternity, following the same exact shape and inclination level. When we switch to the next slide, we realize that actually we see the Fibonacci ratio every day in our daily life. For example, the first image is a sunflower. Notice that the little yellow elements of the sunflower are like rounded in the same exact Fibonacci ratio. Then, for example, you see a galaxy right here at the bottom, which is also rounded in the same sequence. And then you see, for example, a shell of a snail. It is also rounded in the same sequence. And this picture to the right you're currently seeing with the woman in the hair, it's a one I like a lot. This is like a woman that simply splashes with her hair in the air, and this is the spiral that is created, the water spiral that is created by her hair. The thing is that the Fibonacci sequence is all over the nature, and actually we're looking at it every day constantly. But this happens like subliminally, and we do not actually perceive it when we're looking at it. But the thing is that since the whole nature, the whole Mother Earth, and even galaxies and space are based on the Fibonacci sequence, and these percentages 61.8 and 38.2 and 23.6, our human eye has got used so much to these ratios that we perceive everything that is conformed to this ratio as something that is beautiful, and everything which is not like conformed to this ratio, we do not perceive this as beautiful, and we can even say sometimes that this is ugly. This creates the psychological factor behind the Fibonacci ratio, and I will now show you how businesses use the Fibonacci ratios, which is also known as the golden ratio, for their own profit. Here it is, the well-known Apple logo. Notice at the left side of the picture that we see the same exact square spaces, and you have circles inside that totally cover the walls of the squares. See, 1, 2, 3, 5, 8, 13, and if we keep rounding these squares, we will simply continue until eternity. And notice that every component of the Apple logo is fully conformed to this ratio and to these circles and the amount of area each of these circles take. So, for example, if you position the apple in the middle, you will notice that it tops approximately, like it takes approximately half of the rectangle, and you will see that the 8th circle is like fully built in the bitten off piece of the apple. At the same time, the same 8th square placed next to the bitten off circle over here, and with another overlapping 8th circle, they're creating the handle of the apple. And the whole height of the apple is 13. I know that this all sounds very complicated, and probably you're not exactly getting what I'm saying, but still, if you have questions, I repeat again, feel free to ask at any time. But this pretty much explains it all, the image, how the Fibonacci ratio is built in, for example, the Apple logo. And there are like many other logos that we constantly look at that are conformed to the Fibonacci level. For example, the Toyota logo. As far as I know, it is also conformed to the Fibonacci sequence. And actually, every logo designer is pretty familiar with the golden ratio and the Fibonacci ratio. And the modern logo designer, they are all building logos based on this sequence because it really has the power to reflect people's mind. Because as I already said, we observe the Fibonacci ratios in our daily life constantly, and this is why we perceive everything conformed to the Fibonacci ratio as something beautiful. For example, the face you see to the right. This is a very symmetrical face that people say that it is like conformed very much to the Fibonacci sequence, and this is why the human eye perceives this female face as very pretty. A face that is not very responsive to the Fibonacci ratio would not be considered as that beautiful from the people that are looking at it. So Eli is saying that it looks a little bit forced, and you can actually force a picture to any sequence. Actually, Eli, you're totally right about this. We can pretty much force this sequence everywhere, but about the Apple logo, I can guarantee you, and every modern logo, I can guarantee you that they're fully conformed to the sequence. I mean, when you're looking at the Apple logo, it is like pretty obvious. I mean, there is no like any tiny discrepancy anywhere. You take the 8th circle and you simply apply it upward to the left side, and this is how you get the handle. And you see this circle over here, then you see the 2 5 circles that create the little arc at the bottom of the apple, and the distance between the 5 circle, the 8th circle, and the left wall of the Apple logo is left absolutely like totally exactly for one number 3 circle. And when I'm saying number 3 circle and number 5 circle or number 8 circle, I mean that the area that these circles cover, when compared to each other, they totally respond to the 3 ratios I mentioned in the past slides: the 61.8% ratio, the 38.2% ratio, and the 23.6% ratio. So I mean, these are not like simply random areas or written numbers in the circles. These circles are really like, I mean, circle number 5 takes 61.8% of circle number 8, and for example, circle number 3 takes 38.2% of circle number 8. All right, now let's switch to the next slide that will explain to you how Fibonacci levels apply in Forex trading. So the main levels in the Fibonacci Forex trading are the 61.8% level and the 38.2% level. These are the main levels. The secondary level is 23.6% and 50%. Although we did not discuss the 50% level, there is no like big deal in this level in terms of calculation, because it is simply like 50% of anything. And then we have the extensions at 161.8% and 261.8%. These ratios are attained by simply adding 100% to the 61.8% ratio. So when we mention these percentages, we're actually referring to, for example, a trend in Forex trading. So when you measure a trend line, these ratios should be applied as part of this trend that is actually taken as a base. And this brings us to the first, this brings us to the first point of this slide, that traders tend to change their attitude when the price reaches a certain Fibonacci level. And I encourage you here to remember the psychological factor we discussed in the previous slides. So if you measure, for example, a bullish trend line, very often you will see that the price, after the reversal and the finish of the bullish trend, the price will reach 61.8% of the previous trend and could create another turning point and creating another increase. The same is enforced for the 38.2% level, the 23.6% level, and the 50% level. Price tends to create turning points at Fibonacci levels. This is why Fibonacci levels act as a support and resistance and could be used to set entry and exit points on the chart. The thing is that since Fibonacci levels and Fibonacci ratios and the whole Fibonacci sequence has some kind of a reflection of on the human mind, this could also be applied in Forex trading, because for example, when the price reaches a certain level that has psychological factor on human mind, it is very likely that many people, for example, freak out that the price is very low or the price is very high, and they like simply make a decision that could reflect the financial market. And this is like very likely to happen, and it happens often on the Forex chart, and I will show you in the next slide some indicators that will help you identify this situation. By the way, I wanted to mention something else to Eli about his question. I remind again what was his question. He said that the Fibonacci sequence looks a little bit forced, and you can actually force a picture to any sequence. And I would like to say something in this relation. By the way, as I already mentioned, I'm from Bulgaria, and something that Bulgaria is very famous with is the necropolis that was found in my hometown that is called Varna. This is the oldest gold in the world, gold treasure that has been touched by human hand. I mean, we're not talking about some kind of fossil or something that has been found in the ground. We're talking about real gold treasure that has been created by human hand. And I believe this dates something like maybe 9,000 years before Christ. I'm not very sure about this, but this treasure, the basic elements of this treasure, they resemble like little cows, and I assume that these cows were like three. There were 3 cows, and the very interesting thing is that the size of each of these 3 cows was totally conformed to the golden ratio and the Fibonacci sequence. And until I'm talking, I'm actually typing in something in Google because I really want to find this information for you. and I would like to bring in my browser. So because this is very interesting and it is like very old, I simply typed in Varna necropolis Fibonacci, and maybe I will be able to bring a bring image for you, because I assume that this applies very much to what we're currently discussing. All right. Yep, I have already some results. Yes, I'm currently looking at, yeah, here it is. This is what I managed to find in Google. This is the treasure I was talking about, and this is maybe like thousands of years old, maybe 9,000 years old, not exactly sure. I need to Google it. But it appears that these two cows, and I believe they're like more cows, they're totally 100% conform to the Fibonacci sequence and the Fibonacci ratio, and this is proven by scientists, which means that people have discovered this like many years ago in the past. But I believe that we can discuss this like further in our private trading community. If you're interested, I will leave some kind of a link for you guys. So now let's get back to Forex trading and to some Fibonacci indicators in Forex. So, oops, sorry. So the indicators I like most are the Fibonacci retracement, the Fibonacci time zones, the Fibonacci fan, and eventually the Fibonacci arcs. But the first three are my favorite, and they're all conform to the Fibonacci levels. And the good thing is that they are built in every MetaTrader 4 trading platform. And I assume that most of you have probably used at least the Fibonacci retracement indicator, because I use it very often, and you've probably seen that in the private trading group. I constantly upload screenshots where I'm using it, and for example, suggesting some kind of analysis with this indicator. For example, I will now show you how the Fibonacci retracement indicator works. Here it is. We have an image. This is a bullish trend on the Australian dollar, American dollar daily chart. Notice that the trend I've indicated with this green arrow, and the red implied line that is interrupted over here fully selects the top and the bottom of the trend. So you take the Fibonacci retracement indicator, you take the bottom of the trend, and you stretch it to the top, and then the levels are visualized automatically on the chart. Notice that the price conforms a lot to each of these levels. The bottom level is the 61.8 level, then comes the 50% Fibonacci level, then comes 38.2%, and then we have 23.6, which is not very which is not taken very seriously from the price action. But the important thing is to see that the 61.8% Fibonacci level is the main turning point on the chart. Then the price simply uses the 50% level and the 38.2% level to break them in bullish direction, and then to test them as supports and to shoot up in bullish direction again, creating new highs. Now let's take the next indicator, Fibonacci time zones. Again, you take a bullish trend. The green arrow shows the trend I've picked up. And when you take the trend, you see these lines that apply from the left to the right, the vertical lines that represent different time zones. And it appears that every time the price reaches a time zone, it creates a turning point. And I've indicated this with the circles on the chart. So for example, in the first blue circle, we see the beginning of a small bearish trend. Then comes the second circle after a retracement. And in the second circle, the price creates another turning point on the chart, creating the bottom. That is the third circle on the chart. This bottom approximately matches with the line number 3. Notice that the lines 0, 1, 2, and 3 are approximately on the same distance, because the first numbers in the sequence are like 0, 1, 1. So it's totally normal. Then at number 3, the price creates a turning point to the zone number 5. Here it is over here. And zone number 5 is, for example, starts from the 5th line to the 8th line, and it is absolutely the same size as the sum of zone 3 and zone 2, which is totally normal for the Fibonacci sequence. And at the top, in the 4th circle, the price creates another sharp turning point and the decrease. Then in the beginning of zone 8, the price creates another turning point, turning the bullish trend into a bearish trend and creating a very sharp decrease. Then in the beginning of zone 13, the price creates another turning point on the chart. The thing is that if you use this indicator often and if you get used to it, you might be able to use it not to position like trades in terms of price, but to position them in terms of timing. So, for example, if you're using other indicators, you're pretty much getting suggestions about your entry points and your exit points in terms of price. But what if you can conform your trades to timing too? This means that you will sometimes have a suggestion or have an idea for how long you should hold a certain trade. For example, if the price reaches an important Fibonacci time zone, you should always consider that this might be a turning point on the chart. And this is how this indicator works. Now let's go to the Fibonacci fan. It works like to build it, it works absolutely the same way. You take a trend, you mark its bottom and you stretch indicator to the top, and then you get these arcs which are sideways inclined on a distance that fully responds to the Fibonacci sequence, the 38.2%, the 50%, and the 61.8%. And notice, for example, that the price has been increasing in the trend that we take for a base, the green arrow. Then the price creates a correction, reaches the 38.2%, creates another top, then it breaks the 38.2% fan arc as a support, reaches the 50% Fibonacci level, and creates another bullish run. All right, now I suggest that we discuss some practical examples again, where I'm going to pop up my chart. And before we start with the practical examples, I would like to ask you if you have some questions. I would love to explain further, because I realize that the matter might be very confusing to the people who have not been familiar in the past with the Fibonacci sequence and the way it's built and the way that the ratios are attained. So feel free to ask if you have any questions. And then after we're done, we will continue to the practical examples, where I will pop up my chart and I will choose, for example, no, you are going to choose some charts and that we're going to discuss, and I will try to show you the Fibonacci indicators in action. All right, since there are no questions for now, I will pop up my chart. Here it is. And I would like to ask you to suggest a Forex pair that you're willing to discuss. Do you have some Forex pair in mind that you would like to approach? Because I don't want people to think that I have prepared like ready to go examples in advance. So I am totally open. All right, Euro dollar, American dollar, Swiss franc. Let's start with the Euro dollar first, suggested by Barry because he was the first one. All right, let's take something like let's take a bigger chart. Yeah, I have some drawings over here. You know, this consolidation over here, the breakout through the bullish channel that we've been discussing for a long time. Okay, so I'm scrolling through the chart and I'm willing to take, all right, let's take this one, for example. This is where it's located, the Fibonacci retracement. You click over here, you pick up the trend, you stretch the price over here. This is the trend, and you see that After the trend was finished, here it is, the trend, the price has reversed, the price broke the bullish trend, decreased exactly to the 61.8% Fibonacci level, and then it created a turning point on the chart over here. If I switch to the 4-hour chart, we'll have a better picture of how this works. This is the trend. These are the Fibonacci levels. Let me take some shapes over here for you. This is the 61.8% Fibonacci level, and the way the price bounces from it. Then we have another support test of the same level over here. Here it is. All right. And then the price creates a sharp increase, and in the meantime it creates a couple of tests on the 38.2% Fibonacci levels. Here it is. The first one over here, and the second one over here. This is why, notice that these two, the action happens on the 61.8 Fibonacci level and the 38.2% Fibonacci level, which I mentioned that they're like the primary Fibonacci levels, and the 50% Fibonacci level that the price also conformed to, like over here, they're like secondary Fibonacci levels. Here it is, the 50%, the price tested over here, and we can say that the 23.6% acts as a resistance over here. So this is pretty much how the Fibonacci retracement indicator works. It could be fully applied to bearish trends, but when you apply it from the bearish trends, you need to stretch it from the top to the bottom. Cheat asks a question. He says, I find it difficult to choose the top and the bottom to draw Fibonacci. There are many intermediate small retracements which could have been possible bottom tops to draw Fibonacci level. You're absolutely right, Cheat, and this is actually the trickiest part when trading with Fibonacci levels. This is the trickiest part, to say that this is the exact beginning of the trend or this is the exact end of the trend. What I'm doing is to see, for example, an already created retracement and to test it as a base. Take a look over here. Now I'm deleting the indicator. Here it is. I will get back to the daily chart again, which I'm going to zoom in. All right. I take, for example, this as a bottom and this as a top, and I try to match. The trend measurement that much, so the price will be able to match this hesitation over here at the 38.2% Fibonacci level. Take a look. So now I take it, I stretched it to the bottom of the trend to the lower candle wick over here. Now I turn it off, and now I switch to the 4-hour chart again, which I'm going to zoom. Yeah, here it is. Notice that I took the trend as a base, but I measured it with that size so that the price will be able to take into consideration this bottom to be at the 38.2 Fibonacci level. And then it was very easy to guess that the price is really hesitating on the 61.8 Fibonacci level. Here it is. I take it again. I'm even going to delete it. Here it is. I take the bottom of the trend, I take the top of the trend, and I try with adjustments to match the 38.2% Fibonacci level to this bottom over here. You need to be flexible when building the Fibonacci levels. This is the thing, because nothing is 100% sure in Forex trading, and the trend that looks to be finished might actually not be finished. But this is like a way I suggest to you that you can use. We have another question from Ole. He says, do you measure between candles using their candles high-low or the open close? I have noticed it is very what traders do. I myself usually measure between highs and lows. This is the thing, Oli, that this is, it depends. In every trend, this could be different. I mean, I am trying to I'm trying to be flexible. Sometimes I can take the candle wick into consideration, but sometimes not. For example, in this case, notice I take the top I took. Here it is. There are like couple tops at the bottom of the trend, here and over here. So I'm trying to take something like a resistance area between the two tops, which is like somewhere over here, between this top over here and this top that is built by the candle body. And in this case, I disregard the upper candle wick at the top. The same I did with the bottom of the trend. Here it is. Notice that there are a couple candle wicks over here that are approximately in the same level. And since I wanted to conform the indicator to the 38.2% Fibonacci level, I decided to stretch it lower, but I managed to confirm this with the two candle wicks that are in the same area. Actually, when we're looking at the 4-hour chart or even in the daily chart, we see that the support area is higher. However, if we switch to a smaller chart, which I'm currently doing, for example, let's say 1-hour chart. Did I miss it? Where did it go? I'm trying to find my indicator. I missed it. I lost it. All right, let's go back to the 4-hour chart. Here it is. The thing was that when you switch to the 1-hour chart, these candle wicks will look more like a bottom and like a support area. Unfortunately, my chart currently does not cover the 1-hour version of this chart at this time frame, and I'm not able to fully visualize it. This is some kind of a broker issue thing, maybe. But still, you have the lower candle wick over here and the other lower candle wick over here, meaning that we pretty much have a couple bottoms that lay in the same area, which means that this is pretty much a support area, which can be taken as the base of your Fibonacci indicator. Here they are, the first bottom and the second bottom. Now I'm going to delete these. All right. Now let's switch to another chart to test another indicator. For example, let's see, what were your suggestions? American dollar, Swiss franc was suggested by Erdine. So I will switch to that chart. Here it is. And I will try to do the Fibonacci time zones. This is like the trickiest indicator in my opinion. And honestly, I'm not using it very often. But if you master this indicator, I believe that it has very good functions, could be used very successfully to determine timing. So now I'm switching between charts and I'm trying to find a case where the price is actually conforming to Fibonacci time zones. All right, let's take this bullish trend for example, because it's pretty big and I assume it might work. And I will zoom out the chart again. Oh boy. No, not going to be able to zoom out the chart, because when I zoom out the chart, we see January 2015, where the Swiss National Bank announced negative interest rates. So we have this big candle anomaly over here, which like restricts me from having a better picture on the chart. So I'm zooming in again. I'm going to hide it. Here it is, the trend. All right, now you go to insert Fibonacci time zones. Now I take the bottom of the trend and I take the top of the trend approximately, and I try to find some kind of a correlation between time frames. And some of them are not matching very well, but some of them are like pretty impressive. For example, when we take this trend over here, do it like that, but this indicator needs to be moved a little bit to the right. Here it is. The bottom of the trend and the top of the trend over here. Here it is. Notice that some of these levels conform very well to the time frame. So the beginning of the trend, which I'm going to build now, so you'll be able to visualize it, and the end of the trend. This is the trend. Here it is. And this is like, this trend is represented by the 0 and the 1 time frame. Then we have like retracement. The price increases, and after entering the second time zone, the price drops again. Over here. This is the drop. I'm even going to zoom in the chart so we'll be able to see it better. Here it is. Enters the second zone, drops. Then when the price enters in the third zone, it drops again. Creates another turning point on the chart. I'm going to mark these with some kind of circles for you. Here is the first turning point on the chart. The second turning point on the chart. Over here. Here we have another turning point, but I cannot say that it is very good. I was still gonna mark it because there is really a price increase after the price enters the 5th Fibonacci time zone. And then we go to the 8th Fibonacci time zone where we have a big turning point over here. After a price correction, we see a turning point, and after the creation of this bottom, the price enters another bullish trend. Now let me zoom out the chart. And now we reached today's day where we still don't have any clue about what is going to be, but still I don't believe that the 13th time frame should be taken into consideration, because after all, this is some kind of a not that big trend that that will be able to reflect the price action. I mean, that would be able to be taken into consideration for price action activity so further in time. So this is pretty much the way it works. See again the circles and see that the price makes a move after it enters a time zone. The thing is that since the Fibonacci ratios have reflection of human minds, this tends to also to reflect to people's decisions in terms of timing. Maybe a lot of participants on the financial markets will decide that they hold their Forex trade for too much of a time, and maybe it's time to cover the trade and to get rid of it. And when a lot of people think the same way, and since people are like individuals, these decisions are likely to be maybe not forecasted, but likely to be hinted by taking into consideration the Fibonacci levels. This is why I strongly advise you to always to include a Fibonacci indicator before opening a trade, just in case, to be aware if the price is reaching some kind of an important Fibonacci level, because it could always be a turning point, and it could always be contrary to your trading decision. So now I suggest that we try the Fibonacci fan on the next chart that was suggested, the British Pound American Dollar chart suggested by Jason Lee. Now I'm going to the British Pound American Dollar chart, and I'm gonna switch to some kind of a bigger chart. And this time I will try to approach a bearish trend, because we always like concern like bullish trends, which is not necessarily to be always the case. Let's try daily chart, a bigger chart, and let's see if I'll be able to find an example. All right, this looks like a possible case. This bearish trend. I remember this double top over here. Yeah, I do remember it. Yeah. All right, let's take into consideration this bearish trend over here. I choose the Fibonacci fan indicator. Here it is. Take the beginning of the trend and the end of the trend over here. And when I zoom in the chart, oops, zooming out again, so I'll be able to build my indicator in a better way. Notice that I now try to adjust in order to find some kind of a tendency for confirmation to Fibonacci levels. Here it is. The beginning, the end of the trend, something like over here. In this case, I don't notice like particular resistance No, there is actually. Here it is, over here. The price reaches the 38.2 arc, hesitates in its area, then it breaks it, then it hesitates again at the 50% arc, then it directly slices through the 61.8 arc, and then we see couple support functions of that arc. This one is like a little bit too much because the breakout is pretty obvious, but here I believe the example is very good. And the price simply turns this arc from a resistance into a support to bounce in bullish direction and to start a fresh new bullish trend right over here. And now I'll zoom out the chart and I will switch to the 4-hour chart in order to be able to show you these hesitations over here in a better way, so that we'll have like more candles. Notice that I've selected the beginning of the trend from over here and I disregarded this top because, as you see, there is a very big bullish gap over here and a very big bullish candle, which means that this volatile price increase is probably a result of some kind of an economic announcement, which is the reason why I disregarded, because it totally like it is not in harmony with the technical analysis in this case, because this is like a one moment thing and not like a real like harmonic price move. Here it is, the beginning of the trend over here and the end of the trend. Here it is. And then the price reached the 38.2 arc over here, turned it into a resistance. However, that arc got broken in bullish direction. Then the price reached the 50% arc, tested it as a resistance. Notice that there is an opposite pressure in this area since the price turned and bounced initially. Then the same arc was turned into a support over here. The price shot up in bullish direction, broke the arc. I'll zoom out. Then it created a double bottom pattern in the area of the 61.8 arc, but I cannot say that this is like a support test because it is like way too further inside the arc. But this is like the more interesting bounce over here. Another double bottom pattern. Shape. Here it is. And the price totally conforms to the 61.8 arc in order to create a bounce and to start a fresh new bullish trend, which is the absolute power of this indicator. So now I will pop up the presentation again and I will switch to the questions and answers section, and I will encourage you to ask all your questions you have because I would love to explain. I repeat again, I know that this matter is like pretty pretty tricky in terms of understanding the numbers. All right, we have a question from T. Luik. He says, instead of Fibonacci on old history months ago, please look at recent situation to attempt to predict possible trades today. It is easy to look at old history, difficult to look at now and place trade guided by Fibonacci levels. Absolutely true. And for this reason, I will like open a chart and I will try to approach a recent situation where the price, for example, is currently conforming to a Fibonacci level, and I think I have something in mind. Let me think for a second, because I believe we've been talking recently. I believe it was like maybe the American dollar, Canadian dollar, or not sure which exactly was, but yeah. Let me think for a second. Yep, this is the recent situation, by the way, and I've been discussing it like for many times in the private trading community. This is especially for teeth. So T, take a look at this. This is the American dollar, Canadian dollar chart. This is the daily chart, zoomed out. I'll switch to weekly, and I will simply zoom in. Here it is. Notice that I take the top of the bearish trend that came like at the beginning of 2016, and I trace the Fibonacci retracement indicator, and at the 61.8 level, I'm trying to remove this rectangle, here it is. At the 61.8 level, we see that the price creates exact turning point over here. And this is not something that I've prepared especially for this presentation. I remembered it because I believe that we've discussed this with Ellie like for many times about this particular example. Notice that the price reaches 50% level, the 61-point level, and at the same time it tests the upper level of a channel. And I suggested like maybe a few weeks ago, I suggested that the price is very likely to create a bounce, and it may not be a time for the American dollar, Canadian dollar to be bought at this certain period. And as I see now, the price has bounced in bearish direction, and it is very likely to test the lower level of the blue channel and the 38.2% Fibonacci level at the same time, which might be a very good opportunity for a long trade, because since the 38.2% Fibonacci level would be tested as a support, and we see that the price over here shows that it conforms to this level, at the same time the price will test the lower level of the blue bullish channel. This creates a strong support area in my opinion. So if the price reaches the area around the lower level of the channel and the 38.2% Fibonacci level, I believe that there is a big chance that the price reverses. But this is just like a suggestion. I mean, I cannot guarantee you that the price is going to do this, but from what I see in the past on the American dollar, Canadian dollar chart, the weekly chart, I see that the price tends to conform to Fibonacci levels very strongly. Like over here, I'm building the circles for you now. Over here. Then we have another one over here. Then we have another one over here. Then after testing this like for a few weeks, the price broke in bullish direction. And then it tested the 23.6 Fibonacci level as a support. Here it is. Then it reached the 50% Fibonacci level as a resistance, few times by the way. This is the reason I'm going to mark this with a rectangle over here. Here it is. 1, 2, 3 tops, a breakout, and an extension to the 61.8 Fibonacci level, which created the turning point we were discussing like a few weeks ago in the trading group. Here it is. And now we should put in our focus for sure this support zone, in my opinion. This is what I think in this case. So this is what I can give you as like a practical example. And now I will switch to the next question I see. It is from Malik T. Why is the name of that golden calf in Bulgaria? How do you determine when trend is going to retrace using Fibonacci? I'm not I'm not very sure that I understand your first question, Malik. So I would ask you to paraphrase. I assume that you're talking about the treasure and the cows, maybe. Ah, the cows. Yeah, the cows. Yeah, I got it. No, it is not about the name. Malik, what I'm trying to tell you is that this treasure was found in Bulgaria, in my hometown. And this is like proven to be like the oldest like gold treasure created by human hand. And since it is like thousands of years of old, we observe in this treasure that people were pretty familiar with the golden ratio, and they have been like building elements conform to this golden ratio. The thing is that it is very, very old. And then you're asking about the entry and the exit point. Thank you, Eli, about this. Yeah, the second question I understood. The thing is that the Fibonacci indicator is not a very good standalone tool. and a standalone indicator. And I will never suggest you that you use only this indicator. You should always like take into consideration price action, trading volume, for example, and maybe a second indicator that will help you for determining your entry and exit points. For example, I will switch to another chart. Let's choose another chart. For example, I use this. All right, let's take this one because it's very easy to clean it. Here it is. Voila, clean. And I will go, for example, to 1 hour chart. I will zoom it in a bit, and I will try to find another Fibonacci situation, and I will try to interpret what I think in this case. Here it is. This should be like 50%, for example, approximately. Here it is. Oops. There you go. You have a bullish trend. Here it is. Now I will also insert a volume indicator. Here it is, somewhere over here. There you go. Take a look at this. Since we managed to, I will even switch to a 30-minute chart because I would like to see more candles over here. Here it is, 30-minute chart. Zooming in, the trend. There you go. You have a 3 times tested trend. You have a 3 times tested trend. Oops. Here it is, that trend. And the price suddenly breaks this trend over here. It breaks, and it breaks it pretty sharply. You see? And during the breakout, the price first creates the breakout during very high like trading volume. Take a look. This is like, oh, come on. Here it is. This is considered to be a very high trading volume over here. Suddenly, when the price decreases and reaches the 50% Fibonacci level, we see that this trend gets exhausted because the volume drops, right? See? And in the time of the support, the trend is relatively low already. Then we see a price pickup. We see a price increase over here. Here it is. And at the same time, during this price increase, we see a pickup in the trading volume too. Oops. This is the price increase, and this is the pickup we see in the trading volume. And in my opinion, these two volume bars could be considered as a pretty good indicators that the trend is already changing directions. Notice that the price has already bounced. It has already broken the next level as a resistance, the 33.8, the 38.2 Fibonacci level, and at the same time it tries to break over here. It tries to break the next level at 23.6% Fibonacci level. In my opinion, a good entry point in this case is likely to be the area around this candle. After we get from the volume indicator the indication that the volume is high, confirmed by this bullish candle. And then after this bullish candle is created, we see that the price switches above the 23.6 Fibonacci level. It turns it as in the support, then it expands above the 0% Fibonacci level, creates another higher top, which is an indication that the trend might keep going. But then we see that the price creates a decrease over here on a very high trading volume. Take a look over here, and this might be an indication that you need to close. This is just a suggestion how you can add the Fibonacci indicator to your trading strategy. You can use, for example, another indicator. Let's try an oscillator, for example. Let's take the relative strength index. Let's see how this is going to work. Although the relative strength index is like for more short-term things, in my opinion. What do I see here? See that the price touches the overbought zone over here, then it decreases slightly, doesn't manage to touch the oversold zone, but the indicator still starts to increase, which still confirms that the price is bullish. And then you see that the indicator enters the overbought zone here again, and pretty much you can enter after the circle, after the bounce, and you can exit using the RSI indicator on an overbought signal over here. So if we combine these three indicators, the Fibonacci retracement, the volume indicator, and the RSI, you can use the Fibonacci indicator and the volume indicator to enter your trade, and then you can exit thanks to the RSI, thanks to this overbought signal over here. You can pretty much combine all the indicators you want, but what I can suggest you is to always keep an eye on the price action and always to have into consideration the volume indicator when trading Fibonacci levels. And then we have another question from Malik. What is the name, not YPL? The name. All right, Malik, what I can suggest you just write, I will write an answer over here. Write in Google Varna necropole. Here it is. When you write this in Google, you will be able to conduct like a search about it and see information about it, how long, how old it is, and what is the relation of these golden cows to the Fibonacci ratio. But as far as I know, it is it is very old, like ancient. I will now I just wrote in Google Varna necropolis age, and I am willing to share this information with you. Yeah, it says like it is like 4,600 years before Christ. 4,600 years before Christ. How about that? All right, we have another question over here coming from Teet. Good example with combining indicators are look at Fibonacci on 1 hour and also 1 day, but often retracements will be in opposite direction. So I don't know which way to trade. Question. In day trades, should I look at one Fibonacci or 1 hour, or at one Fibonacci on 1 hour or 1 day? Let me see if I'm able to understand this in a good way. Okay. I assume that you're asking me when you're day trading which chart to look at. Is that correct, Keith? Just give me a second. Yeah, good example. So I draw on the same pair, one Fibonacci 1 and one pair. Cheat, I'm not very sure that I understand your question. Could you give me a little bit more detail so I will be able to answer you in a better way? Not sure if you're asking me about which time frames you should use when you're day trading with Fibonacci indicator. So please, if you're able to share some more details with me, I would love to answer to your question. In the meantime, when you are paraphrasing your question, I will launch the poll I created for you. That is, how satisfied are you from this course? 1 is bad and 5 is not very bad. So I'm gonna launch it now. Please, I'll be very happy if you vote for me. Here it is. I assume you're able. I will be happy if you vote for me. In the meantime, Teeth paraphrases. Yes, which time frame? 1 hour or 1 day on same pair? I get opposite trade directions, he said. I mean, if you're day trading, I don't think you should look at the daily chart at all. I mean, if you are day trading, I believe like the best chart for you is a small chart, starting from a 5-minute chart to 1 hour chart or even 30-minute chart. I mean, if you're day trading, you should concentrate on smaller charts for sure. Because after all, if you're looking at a daily chart, this means since you're day trading, you're referring to only one candle. And I am not sure that this is a good idea in this case. So 9 people have voted for now, 80% of the people. I will wait for the vote like for 30 more seconds and I will turn it off, and maybe I can create one example for Teeth about the chart time frames and the way he can use chart time frames in Fibonacci trading. All right, I'm closing the poll. Thank you for voting, guys. Thank you for voting. Now I will pop up the chart again and I will explain what I meant by selecting like a cleaner chart. Yeah, for example, all right, let's take something like this one. This is Euro Swiss franc. Take a look at this. If you're a day trader, this means that your whole trading position for the day will be concentrated in this candle over here. Only one single candle. That is not good for day trading. I mean, you can always refer to the daily chart when you're day trading, just for reference, to see if the price is reaching some kind of an important Fibonacci level, for example, but never base your daily trades on daily chart. I mean, in my opinion, if you're a day trader, you should trade on the 5-minute chart, for example. Here it is. Or on the 15-minute chart, or on the 30-minute chart. I even believe that the 1-hour chart might be like too much because it provides like only 24 candles. Yeah, I mean, you can still use it, but not to base your trades at it. You should base your trading decisions on the 30-minute chart maybe, or on the 15-minute chart if you're a day trader. But you should always keep an eye on the 1-hour chart and the 4-hour chart, even on the daily chart, in order to check if the price is reaching some kind of an important level. For example, take a look at this. I see like a bearish trend over here, which is currently like maybe broken. Here it is. Or this is even like a channel. Yep, voila. Here is the channel. And the price is like increasing intensity of testing. So if this channel gets broken, since we have a support level over here at 1.0885, this means that the support level at white and the upper level of the channel are sandwiching the price action. So pretty much the channel might break through the upper level. If this happens, you can pretty much use the Fibonacci levels stretched from the bottom of the trend to the top of the trend to measure for how long the price increase can continue. Here it is, over here. Yep, after the trend breakout. Now switching back to the 1-hour chart. Because since the price move here is more like a sideways move rather than a bearish, sharp bearish run, I mean the Fibonacci levels are pretty close to each other. And now you can go to a 30-minute chart or a 15-minute chart where you can base your decisions. I mean, confirm the breakout on the 1-hour chart, for example, but enter the trade on the 15-minute chart, for example, on a breakout through the 38.2 Fibonacci level, and then you can pretty much follow your trade on the 30-minute chart, and you can pretty much aim for a price increase to a 61.8 Fibonacci level at least. If the price creates a higher top over here above the 50% Fibonacci level, then there is a great chance that the increase continues to the 61.8 Fibonacci level. I hope that I managed to answer your question. So guys, if you have some more questions, I would love to answer them. So feel free to ask your questions now. By the way, in the meantime, I would like to mention that tomorrow we're launching another webinar that is free. I mean, it's not necessary to be a paid member. at Forex Ball to be a member or a private member in order to participate to this webinar. It is totally free for everyone. It's going to be very basic, so it might not be very interesting to you, but just want to let you know. It is about what is Forex trading and how to profit from currency. The webinar event could be found at our Facebook page, the Forex Ball Facebook page, and it's going to be conducted by myself again. And the point of this webinar is to educate people that are total beginners and have no idea what is Forex trading, to educate them about the financial market and the way they can use strategy to create consistent profits from Forex trading. Just wanted to let you know about this. Probably you've received yesterday the email notification about the new blog post. There is a inside the blog post there is a lead to the webinar which you can use to register, or you can simply go to the event on Facebook where you can register and claim your seat. Feel free to participate. This month we're very active on webinars, and from now on we plan to deliver 2 webinars for our private members per month, 2 live webinars. At the same time, tomorrow I'm going to launch also a live analysis session, which I hope that you will all participate at. Yeah, we're keeping it active, we're keeping you busy, and that's a very good thing, because in my opinion, the way Forex trading should be conducted is to be social and to interact with other traders and to share. Because if you want to bring Forex trading to the next level, you should simply be social. Everyone can stay at home and trade like privately without seeing other people, but in my opinion, this is not like the best way to do it. The best way to do it is to be engaging, to be social, to be interactive, because when people interact, they soon or later they like reach the truth and land on the same page, which creates very good decisions in trading, in my opinion. So since there are no more questions, I would like to thank you very much for watching this webinar. Thank you very much for being part of the webinar. I'm going to turn on my camera again so you can see my pretty face again. That's me. Thank you very much for watching, being part of the webinar. I'm Damian from forexball.com. Looking forward to see you at the next webinar, or again tomorrow on the tomorrow's free webinar or the live analysis session that I'm launching. I wish you a very great day, and also I wish you happy and safe Forex trading, and I wish you that you collect a lot of pips to your trading capital. Thank you very much again for being part of this webinar. I hope you liked it, and I assume that the next webinar we're going to launch maybe in the beginning of the month, maybe 10th of June approximately. You will get a notification about it. So I hope I will see you, all of you over there. Thank you very much again. I'm Damian. Have a great day.